traders, welcome to the Wednesday webinar. Guys, first time in the entire time we started on time, and it just switched to 8:46. Oh, thanks for that, Joe. So yeah, we're finally figuring it out. Team came together. We got a great show. Obviously, we need to step it up here with everything that's happening here in the markets. Lots going on. We've got China, we got currency devaluation, we got global interest rates plummeting, we got stock markets trying to plummet. We've got the middle of August as everyone's away. So yeah, this is going to be a good show. We got a lot of good information for you here, guys. As you're logging in here, we have the questions and comments. William and Yuri and No Nemo. Steve, Lance, what's up, guys? How's everyone doing? Throw a thumbs up here on that little YouTube window if you appreciate the fun we're about to have here on the Wednesday webcast, Elliott Wave live stream. We've got the senior FX analyst at Elliott Wave International, Jim Martens, a guy who I'm looking forward to interviewing. As always, we have our senior Alex Cobricia. Oh, I messed it up.
Mine's hey.
Alex, good morning, sir. How are you?
Hey, good morning. I don't know if you hear me well. I don't hear you so loud.
Oh, you know what? Uh-oh, I just screwed it up. Oh, no! I had such a good open. I didn't have my microphone on.
Now it's better.
Unbelievable. I thought we had a perfect open. I didn't put my microphone on. Sorry, guys. Is that better?
Yeah, now it's great.
All right, good. I'm telling you, y'all, there's a lot to remember. This is like, there's about 50 things to do these live streams. That's all right, guys. Bear with us. You know we're not professional production TV studio people. We just like to talk the markets, have fun, interact with you guys. So throw your questions, comments in there, and we're good. So is everybody okay? Audio's good? Just throw us a little comment down there, and we'll get rolling here. So, guys, it's fun right here. Let's kind of jump into the markets. Kind of give you updated as to where we are right now. So obviously it's been busy August after a very quiet period in here. We've got S&P futures taking a big drop. What just happened? We were up this morning and now we're down while we're setting up for this show. The futures are down. Holy bananas. Wow. So let me bring this over here. Jose, I appreciate that. Oh my God, I tell you what, man. Markets are going crazy. God, it's good to have volatility back, huh? So let's just kind of look through here on the shorter term. This is what I like to do when I come in the morning. Usually this happens much earlier unless it's a TV day. So futures just took a big drop, right? So it's 80 at about 540 this morning. Okay, guys, I think we might be back. Sorry about that. That was a pretty significant hardware crash. I think we know what happened. One of the capture cards in the computer, I think that's what's up, so we're going to have to test before the next one, but that was nasty. Sorry, guys. Yeah, thanks for hanging with us. Lost most of you guys, so that's cool. Well, you guys catch the recording. All right, let me get my platforms back open. God, that's so annoying. All right, well, hey, the show must go on, right? So as the futures were crashing, my computer was crashing. Should have been a sign, right? So let me just pull this back open here. Alex, you with me?
Yeah, I'm here, man.
All right, perfect. So let me see if I can get. I lost my agenda too. That's cool. We're going to shoot from the hip here, guys. All right, so futures continue to drop. We're down 1%. Alex, while the computer was crashing, what was happening? Is there news that was out, or what's going on in the to make futures drop here? Gold is 1510, extremely bid. Did you see any news hitting here? Alex.
Yeah, in regards to gold, no, I think it's on account of risk off teams.
Cool. All right, sounds good. All right, so I was going to show you the positions. We are long. Let me just give you a quick little run through, and then we're going to try to bring Jim in and try to get the show back on schedule. All right, this is a big kind of development here. 25 minutes before the open. So, you know what's happening here. If we look over at the red, there's a must-hold level that's going to likely be tested today. You know, we've been tracking this entire move as a three-wave push up. If we drop below the 78% retracement from the June low, that's going to be a 27.90. That's a game changer. Okay, I talked about this on CNBC last night, specifically about technology and the XLK. If you break below here, this is the point where the retracement that we've seen from these lows is probably no longer retracement. The drop that we saw back here in May and June, if we look at this and put a quick percent change on here, that percent change, as Motivate pops up, is about 7.57% drop. Thus far, we've seen a 6.9% drop. So all we need is another 0.6% on the downside, and you're going to start to see what they call overbalance. And that would suggest that this correction is not properly labeled. It is of a lesser, right now it's of a lesser degree, and if you get past this depth, likely suggests that there is something larger happening here. So this is interesting. We are short in the S&P. My Thinkorswim platform, take me a second to pull it up. We do have 2825s, 2800 SPX put spreads on. So those are going to kick in. We are also long gold. And if you guys want, I can show you the position. I did the free video here a couple days ago. The gold count is interesting. Not exactly sure what is happening. If you saw the YouTube video a couple days ago, I kind of just left it a little open in terms of what exactly is happening here. Respecting the uptrend, I'm wondering if in fact this was some kind of wave 2 and perhaps we're going to go into a larger degree third wave. I don't think so. I'm still going to consider this though a wave 5 of 1. So it's kind of running away here, but you can count a completed 5-wave move. We do have GLD call spreads on. We're going to look to take those off, but today's open is going to be extremely important. Bond market is just crazy bid. Same kind of situation here. From the March lows in bonds, we've seen a big push up in 1, down in 2, 3, 4, and then we've just gone parabolic. There's been a global drop in yields. The U.S. is catching down to the rest of the world. What does that mean? Is this a deflationary push? Is this just, as I said, kind of realigning the U.S. with the rest of the world? There's a bunch of things happening. Obviously, dollar China is moving up. There's a lot in the FX markets that are driving this. And when Alex and I first met, I was trading on an FX fund. I was senior technical analyst, and this is when the heydays of the credit crisis, and the biggest game in town was the FX markets, right? So when FX gets moving, the other 3 major asset classes, fixed income, commodities, and equities, really tend to take notice. And there's times where I think that the FX market will actually kind of lead and set the tone for what's happening. In China, letting this kind of band at 7.0 dollar to the yuan, they let that go, kind of reflecting the weakness in China that's been potentially in place for a long time, or something that's been imposed by our trade tariffs and trade wars that are being pushed on China to kind of level the playing field for trade. So whatever the reason, FX is really sending kind of a ripple through all asset classes. So I think it's time, especially now, when markets or futures are down heavy overnight. We just saw like probably a 100-point swing in the S&P futures in the time that our computer crashed. It's time to kind of take it calm, right? Of course, I'm annoyed that my computer crashed, but the most important thing is we've got the market to deal with. We got positions. We have about 40 open positions with our members. You got to say, look, okay, keep it calm. And let's kind of be objective about what we see, trade the patterns we want, not get too emotional in these kind of markets. And a guy that, you know, I'm setting up, obviously, Jim Martens from Elliott Wave International. Thanks, just yell at me. Oh. Just yell at me. Thanks, man. At this point, like the guys are telling me your charts aren't up, just throw stuff at me, guys. In fact, give me a mimosa or Bloody Mary while you're up. We might need it to get through today. No, just kidding. Let's bring in Jim Martens from Elliott Wave International. Jim is the senior. Jim, help me out. You're the senior FX strategist at Elliott Wave International, correct?
That's correct, Todd.
Welcome to the show. Thanks for bearing with us.
Pleasure to be here, Todd. Thanks.
I have a computer that's like emitting smoke down there. So Jim is, just a quick introduction, Jim is actually a mentor of mine. When I was trading on that FX fund, I was feverishly studying Elliott, and Jim was kind enough to field my calls, and I hope you don't get a bunch of phone calls now, but I would walk through different Elliott Wave counts and pick his brain for as much as I could, and he was hugely influential in me like learning the Elliott Wave principle. So you are incredibly kind with your time back then, as you are now in a busy market. Thank you very much for both of those.
It was my pleasure. I have fond memories of that, Todd. Miss talking to you for those many hours, that's for sure.
Yeah, that was awesome. And that's the thing with Elliott. You gotta grasp onto a mentor and find somebody who really walk you through and will drastically shorten your learning curve. So, Jim, talk about a little bit about why, especially in a day like today, when you sit down on your computer in the morning and you lay out and you set the tone for all your guys at Elliott Wave International, specifically in FX, after a period of record low volatility in the euro, what do you tell yourself when you sit down in the morning? Like take us through that process.
Well, Todd, every day I sit down, it's just a brand new day for me. So, when I sit down, I'm not looking at the news. I've looked at the ticker while getting ready and getting myself into the office just to see where things are. But as you know, I look at every market, one market at a time, one chart at a time. I start every day looking at the daily chart, maybe the weekly chart, just to remind myself the big picture, what's the trend, before I jump into the intraday charts, the 60-minute and on down, just looking for the short-term patterns to try to set a tone for today in particular within that trend. And later on, I'll turn the TV on and see what's going on in the world, but you know how I approach it. Whatever's happening in the world is going to be reflected in price. It's going to be on that chart. So that's really all I need. So it's a much different approach from many of my peers or most that follow the markets. I'm trying not to react to the market. I'm trying to anticipate the market.
But that's what I'll push back on you a little bit. Like, and this might sound a little rude, but you're not the only one who gets the luxury of anticipating market moves and news via the wave principle. I mean, isn't that, if you're truly a practitioner of the wave principle, I mean, how many times does it kind of set you ahead of the news cycle and give you a slight advantage? Is that fair to say? I mean, when markets are volatile, it's best to just shut the news off and focus on the price patterns.
Well, I think so, and as you know, I've been doing this a long time, started with the wave principle in the mid-'80s. So, this is the one methodology I've used for all those years. So I think a testament to how well it has served me. Right. But I'm not going to impose myself on the market. So if I see a pattern, I'm going to react and take advantage of that pattern. What I like about the wave principle is I know where that pattern breaks down, so where am I wrong, and I'm willing to admit I'm wrong and jump, get out of the way of that trend and regroup, find a different opportunity. But it is all about pattern completion. I could point back to just the last Fed announcement. I think it was one of the, I forget which market it might have been, perhaps it was cable, where that morning I could see a triangle on a lower degree scale finishing up.
Yep.
And so I had a good idea of
that. We've seen some issues with this before, and I think we know what's up. So, guys, we should be back. Holy bananas. Talk about market volatility. of course, the hardware is going to act up when the markets are going crazy. I mean, so anyways, appreciate you bearing with us, Jim and Alex. I think we are back. I think we identified the problem to be screen sharing. So we will be working on a solution ahead of the next webinar. But Jim, you and Alex are just having a nice conversation. Again, and viewers, thanks for hanging in. Boy, this is haven't seen this before, but we'll have it back. But you guys are having a nice conversation, just talking about. I think you guys are talking about the yen, kind of in sort of a different kind of interpretation, because the yen is really important in terms of kind of macro picture. The direction of the yen has a pretty big influence on where bonds and stocks are going. Jim, where are you guys right now with the yen? I believe you guys have been looking for a triangle to resume on the upside. Is that something that you guys are still tracking?
We are, Todd, and that was our discussion. I'd seen Alex setting up his screens and noticed his triangle, and he was counting a bearish triangle. We've been counting a bullish triangle, and what I was talking to Alex about is the amazing thing about the wave principle to me is you can have different counts, but in this case, both of us are counting a triangle. It'll result going in different directions, but for months, frankly years, it has served us here well with my readers of catching major turns back and forth, sticking with this what looks like a sideways movement, which it is, but there's plenty of opportunity within it to capture, which we did. Now, in the end, I might be wrong, and Alex has the bearish count going, and that might be the right way to go. I'll know here within a day or two, I would suppose. 104.85 is my key level. If that's broke, I'll jump over to Alex's count. You can't see my chart, but his count's my alternate. So that's the value of the wave principle. Even when we have competing counts, even when we're interpreting it a little different, we're both counting a triangle, it can serve us real well for a long period of time. Ultimately, we might find out the count's incorrect, but we did.
Right. That's interesting. So I was just going to, I was going to show. I don't want to push my luck here and blow this thing up again, but just to reiterate what Jim is saying. I mean, FX has been extremely quiet. Euro, I think the realized volatility is the lowest in 40 years. The triangle, how long has the dollar-yen triangle been happening here? At least
depending on if you want to do the bullish triangle, it's back to 2015. If it's the bearish triangle, it's 2016.
Right.
So either way, a long period of contraction. Anyone could look at that chart with any basic understanding of the wave principle or even technical analysis and see a triangle there one way or another.
Okay, perfect. And for stock traders out there, I'm just going to flip screens and try to press my luck here. And I know I'm too big and whatever. The formatting's right out the window. But this is the FXY. This is going to be trading opposite to where dollar yen is. So if FXY, this is the ETF that tracks the yen. If this goes up, that means the yen is being bought. And the only reason that global asset managers want to rush into the yen is safety and liquidity. They've been fighting a deflationary spiral for 20 years, and generally when you want to go into sort of an appreciating currency that's liquid, not very tied to sort of nothing that would sell off if equities sell off. There's also a very important relationship with yields. Yields are dropping, which would generally push dollar yen lower. Now, you could make the case that bonds are up at a 5-wave top. We showed that earlier in the webinar. And if bonds do sell off, if this is in fact a low in yields, we could certainly get a move higher in dollar yen, as Jim is looking. So the yen is really, really important. It correlates well to our 10-year yields, and it also correlates well to our stock market. Jim, talk about with this kind of deflationary scare, that's the word that's being thrown around a lot in the news here. What are you seeing in the commodity currencies, which obviously inflation or deflation has a big impact on the commodity currencies? What are you seeing in terms of wave counts?
Well, overall there, we're just, those have been difficult reads for us, so we're just following the trend, especially Aussie dollar has been declining of late. We've stayed with it. We were looking for a bottom, haven't seen one. We had to change our account recently in that, so we're kind of just in the mode of sticking with the trend until we see evidence to the contrary. And I haven't seen that yet, but I will say, I have a 3-hour chart in front of me, and I see a little triangle possibility just under 68. You know the wave principle. You know what that means. If I see a triangle, I expect a thrust in the direction of the larger trend. We've seen that, but a thrust from a triangle is a terminal event, which means it's the end, a fifth wave. So we're going to see if a little bit of a reversal occurs here. I've kind of been fighting dollar CAD. It's been rising. I've kind of been fighting it. Haven't seen evidence of reversal, so I have to just go with it. But I'm focusing on seeing if I can identify evidence of a downturn. But I'm going to look for that. I want to see the market give me that signal before I buck the trends.
And that's the important thing, and that's why I like Jim, and that's why I really wanted to bring him on. And look how calm he is. Like, he's got a bunch happening. His subscribers are waiting for him at Elliott Wave International. He's sitting us through as we've blown up the webinar software here twice. He's just cool as a cucumber, and that's so important, I think, especially in markets like this, just to trade what you see, not what you think. And that's what's so powerful about the wave principle, is it really keeps those emotions in check. And you can pick up reversal points and turning points that others don't see when they are succumbing to their emotions. Jim, I would say you're a man of very high EQ, probably IQ, but EQ, emotional intelligence, right? Know what you know.
Can I ask Jim one?
Go ahead,
Can I
Alex.
ask Jim
Go ahead, Alex.
one
Alex is jumping
question?
out of his shoes to ask you questions.
Yeah, I'm kind of always since I'm generally studying, as you guys, deeply Elliott Wave methodology. My mentor was actually Todd 10 years ago, so it's a kind of similar time frames. And Todd actually gave me the infection bug, and since then I cannot sleep. I don't know, should I thank him or something else?
It's a curse, that's for sure.
Yeah, from that time I'm kind of living and breathing Elliott Wave through all phenomena. And it's so fascinating on many scales. And what I'm kind of trying to study is that very difficult time relation between the corrections and the guidelines of the right look. Would you give me a few things from your experience? Is this a good point of direction to look and research, or it's just a random thing? What do you think?
Well, I started this. The wave principle to me is all about price pattern, and that's what I'm going to look at. That's what's going to dominate my analysis, is price patterns, 5s and 3s. So I don't measure much the relationships between different waves. You mentioned the concept of the right look. That's a guideline. I think it's terribly important. But that's as far as I kind of take it. I do like to see some similarities between, say, 4 and 2 in terms of how long the duration of them. If wave 3 is super extended, and that's common, especially if we're talking commodity stuff, people might want to think wave 4 should be quite long, but it's a signal of a strong underlying trend. It might not last as long as you might like to make it look so good. So I don't put a whole lot of stock into analyzing time. That doesn't mean it's not valuable, and I'll walk you through real quickly. Just an example, we've had an extended third wave to the upside, and I see a pullback that ends after 3 waves, and there's reason to believe it's over. I'm going to mark a 4 done. My alternate is going to be wave A of 4. Maybe it's A of a triangle or a flat, the first leg of some combination. But what the market signaled to me is that the setback is indeed a correction, because the first leg's a 3. And then I'm just going to track the market. And if it rises and double tops in 3 waves, I'm going to start thinking about a flat. But I'm going to let the market dictate it. I try not to go too far in front of it, calling the pattern. Calling the trend, yes, but not calling which pattern is going to unfold.
Oh, thank you. Great advice. Yeah.
Yeah.
And one more thing, a small question regarding alternate counts, because I learned that from Todd, and before, when I was a young kind of in practicing Elliott, I was just kind of biased that my count has to be right, until I was banged in my head many times, and learned the lesson, and then start to listening Todd and have alternate wave counts. What would you say about these options? Should you have them? Are they recommendable? Kind of a thing to have?
If you understand how they're trading, how to structure the trades, it's a great approach. It's a bit beyond me. I am very simple in my work. use the wave principle. I can count to 5. I always joke I'm smart enough to count to 5, and I know my ABCs through E.
Yeah,
Sometimes I have to throw a W, X, Y in there, but that's where I kind of, that's where I kind of end my knowledge of that. I leave to Todd things like options. I'm always interested in how he structures an option strategy around an outlook based on the wave principle. And again, it's always an outlook based on the wave principle. I've never gotten paid or profited from having the right count. It's because I acted on what the trend as the count dictated the trend is, what direction it's going. And that's the key thing, because I mentioned that because you started the question about talking about having the right count and alternate counts. People joke, and I've heard you guys joke about it before, 10 Elliottians in a room, 10 different counts. I disagree with you. There could be 20 or 30 different counts. I'm looking at the direction of the trend. I've been working 3 counts. There's examples where I've been working 3 or more counts on the same price data, but if they're all pointing in the same direction, that's what's important.
Exactly.
And in fact, you would think I'd be less comfortable having multiple wave counts. I'm more comfortable because I can't find a bearish count. All the possibilities go in one direction. I'm just going in that direction. I'm using now those counts to find the various key levels that will, if broken, will toss one count down.
Yeah, great point.
That's a great. That's a great point. But and that's why Elliott Wave is such an all-encompassing approach, because some people who use, like, let's take Bob for example. Bob, I think if he had this conversation, and hopefully I don't get in trouble for saying this, Bob, I think, would agree with you. If he's sitting there trading money like he did, winning the Robbins competition in 1984, he's looking at multiple counts. But when you have a singular 1-month publication, you can't be going back and forth and looking at multiple possibilities. Just here's what it is. But I think they brought trading analysis on to work with you guys, such that we're constantly looking and examining different counts. And to your point, Jim, as long as the trend is suggesting that we continue to move this way, find a reason to stay with the trend, have multiple possibilities until there's such a time there's overwhelming evidence to suggest we go the other way. Just like this bond move, just like this gold move. Like, if we look at the count right now, I mean, there's a bunch of reasons I could say sell my bond position, sell my gold, but I'm going to try as hard as I can to find multiple interpretations that allow us to respect that trend. And I think that's a different, I mean, you're down in the pits, so to speak. I mean, you're putting multiple updates per day out for your subscribers at Elliott Wave International who are trading this, especially in this high volatility situation. You have to look at multiple interpretations, but the trend, especially FX, when FX gets trending, I mean, that it goes for long periods of time, and the trends are long and deliberate, right? So you got to find every reason you can to stick with that trend until there's time to fight it. So I think that's a key distinction, and Elliott can get a bad name because if you treat it as a forecasting long-term analytical approach, it can be challenging at times, where I think from a discretionary trader's point of view, to have multiple interpretations that point to the market going in the same direction, that's an entirely different animal, but it's all within the same methodology, right?
That's correct. And that's the thing about the wave principle. As I mentioned earlier, I've been following it since the mid-'80s, and I've never strayed from it, but because it agrees with how I think, with my personality, and that's the key of finding any methodology. I push, as you do, I push the wave principle. I think there's tremendous value in it, and even over these years, I probably just scratched the surface, really. But if to me, you read about it, you see it in action. I saw it right away, so I've stuck with it, and I see it over and over and over again. So here I am still working with it, and that's what everybody has to do. You have to find that methodology, hopefully the wave principle, because they see it. They see it in action. They can believe it. They can have faith in it, even when it doesn't work out, and they have to go back and rework to a different count. At least you knew where you were wrong. The 100%. Most important thing, and so.
That's great. That's beautiful. It's with those multiple interpretations, as Jim said, there's always a point of invalidation, which becomes your risk management on whatever markets you're trading. So, Jim, I appreciate it. I've taken up way too much of your time. Thanks for bearing with us in this crash fest. No pun intended on computers and in the stock market. So, hopefully, I'll bring you back when we have this hardware situation set up and addressed. So, thank you again for your patience.
It's been my pleasure.
Thank you, Jim, on answers.
No, it's been my pleasure. Call me anytime.
All right. Thanks, Jim. I appreciate it. All right. So let's find a screen that's in fact working. Here we go. I don't know what's going on back here, but this whole thing got blown up. But anyways, guys, so really good interview with Jim. Appreciate him bearing with us. I appreciate you guys bearing with us. We'll figure this out. I think I know what's up, actually. I think it's the screen sharing going back and forth that's blowing it up. But we'll get that addressed. So, Alex, what was your takeaways on that, on Jim's approach, especially in such a volatile market like we have right now?
Yeah, I mean, I think your point, I mean, obviously Jim is a great guy, and I know about him as well as I know about you for the last 10, 11 years. I think the whole world which is involved in Elliott Wave knows who Jim Martens is.
Yeah.
And his credibility and his years doing Elliott Wave. But I'm gonna kind of do a mix, because I think that analytical and trading everyday markets approach and Elliott are a different animal from my experience. Mm-hmm. So I think when you do active as you do trading, you need to be prepared very quickly to switch between different counts. And when you are kind of putting analysis in front of the thousands and thousands of subscribers, it's not so nice to change this analysis back and forth every day. You need to follow a trend on the larger time frame and stick to it until it's invalidated. And that's very clear in Elliott. We are kind of more of stay flexible yoga guys. Like day to day, you know, leg above the head thing, you know. So our ship turns very quickly, and their ship kind of moves slowly with trends. That's how I see it.
That's a good point. That's a really good point. All right, good stuff. So let's see here. Let me just see.